Welcome to the B.F. Anderson Technical Report for October the 8th. We are acting like back in a bull market here. We saw the correction in the NASDAQ. We've now pulled back above the upper moving average. Uptrend is intact. Things are looking very constructive this week. On the weekly basis, we never really said that we were going into a bear market. We always felt that this was somewhat of a correction, and that's pretty much looking like the case. 35-week moving average continues in an uptrend. We look positive here. Market's in a bull cycle. S&P 500 on a monthly basis, we're on a golden cross. NASDAQ, we're still on a golden cross. China, still on a golden cross. So we're in really good shape on a monthly basis. So long term, everything's in an uptrend, and actually intermediate term things are turning up as well as short term. Here's the aggression index, which is where we're doing a ratio of the NASDAQ compared to the consumer staples. You can see the correction. We pulled down, but as you can see, we're starting to build an uptrend here on a daily basis. However, though, the actual indicator is a weekly indicator where we use the 40-week moving average. We're above the moving average and turning up. So investors are becoming aggressive here. That's a good sign. Now, on the three economic indicators that we follow, I have noticed here recently that we're starting to see an uptick in interest rates. This is probably a good thing. This is telling us that maybe loan demand is picking up a little bit. Economic activity is picking up. That's not a bad situation. However, on the price of oil, we continue to be in a downtrend on the 200-day moving average, continuing to struggle. Now, the financial stocks, you can see a little bit of an improvement. And like I said last week, we want to be contextual. Take everything in context. If interest rates start to improve, that will help the financial stocks, and that's basically what's happening. On the S&P 500, on the 25-day and 50-day, good shape. We pulled back. You can see the correction here. Now we're back above the moving averages, looking better. All along now, we have held that 200-day moving average. We've now turned up. So the bull market continues. Thank goodness. New lows, no problem. We did get a spike up here several weeks ago. However, we're starting to stabilize. We're below 40. No problem there. On new highs, actually good news there as well. We're seeing a turn up in new highs. We're now at 70 new highs on the NASDAQ, whereas we peaked out at over 150, roughly 155. And so we're starting to see some improvement there, and it's somewhat of an indicator. On the put-call ratio, which is measuring sentiment, fear, greed, we're still in greed. And like I've told my clients and listeners in the past, this can go on for a long time. So sentiment is just something, it's a secondary thought, it's a secondary indicator, but it is saying that there is a lot of greed in the market right now, which can be a negative, but it's a hard one to figure, but you still need to be aware of it. Volatility index, we're still seeing an elevated level in volatility, but not bad. I mean, we're below 30, which is the magic number. We did get down to about 22.5. Now we're back up around 27.5. So we're okay there. Nothing to be concerned about. Now, on the Russell 2000, I'm noticing this week that we're seeing a tremendous amount of strength in the small cap stocks for the first time in a long time. And if you go back and look at this, now this is an indicator I use called rate of change. Now I use 132 days. So the rate of change in the small cap Russell 2000 for the last 132 days has been 40.83%. So in other words, I'm measuring momentum from the low. So if you go back and you say, okay, well, the only time this has happened where we have gone down to this line, then rallied up to this line was in 2003, then 2009, same situation, and here we have it again. So what it's saying is, and if you correlate it with the actual index, you can actually see that it was a continuation of an uptrend. So basically, the small caps are starting to show some pretty remarkable strength here. Now, a lot of people worry about the debt. They worry about the economic activity and so forth. This is a ratio of the Barclays High Yield Bond Fund compared to Treasury bonds. So in other words, If you're worried about the economy, you're not going to want to buy high yield bonds because they're risky. You're going to want to buy treasury bonds. So when the line goes up, it means that the junk bonds are outperforming the treasury bonds. So as you can see here on this rate of change reading, which we go back 132 days from the market low on March 23rd, you can see here like in '09 you got real extreme negative readings and then rallied. And then you can see here where we are today, we got an extreme negative read, now we're rallying. So if the end of the world is coming, I don't see it because junk bonds are outperforming treasury bonds. That's telling you that investors think things are pretty good right now. Now, this is the Value Line Geometric Index. It's a very important index because it's a very broad-based index. There's 1,700 stocks in this index, and it's equally weighted. Most indexes are not equally weighted. They're market cap weighted. So the bigger the company, the more influence it has on the index. Well, on the Value Line, it's all equally weighted. But what's interesting here is that if you go back to '07, the index was around 500. So we dropped in the '09 bear market. We rallied back. We broke out. Then we pulled back. We're currently at a reading of 471. So basically what it's saying is that the average stock has really not done anything for about 13 years. So for a bubble to form in the market, you've got to have the average stock where everybody's getting rich in the market, and therefore you get a bubble. I don't think we're anywhere close to a bubble. So, a lot of people are concerned about the fact that the market's been going up and so forth, but the average stock has really gone nowhere for 13 years. Just something to be aware of. Now, a couple of indexes or ETFs that I wanted to bring to your attention. This is biotech. Nice looking pattern, broke out, actually looking pretty good, could make a new high. We are seeing a lot of biotech stocks looking good here. Here is the semiconductors. Semiconductors are just really important, as we've said before. It's like the transports. It's like the old Dow Jones. It's like the old railroads. Back in the old days, back in the 20s and the 30s, the railroads dominated the market. That was everything and anything. Well, semiconductors are kind of like that now. Semiconductors are in everything. So when you see a nice move here in the semiconductor stocks, it's telling you that the economy is pretty solid. Now, we'll get into the top 5 here. This is Digital Turbine. This is a company that's involved in software for applications. So when you're on your phone and you have apps, you know what I'm talking about. Stock is in a solid uptrend above the 10-day moving average. Way back here, you got a nice gap up buy signal. You got another gap up buy signal here. The stock continues to look very constructive. This is Ceres Therapeutics. I'm not really clear on this company yet, but I do know they had a major gap up buy signal here, which is what pushed it onto our list. And the stock has continued to maintain the gap. So it's worth keeping an eye on, but it is biotechnology, and we're saying the biotechnology stocks are looking good. This is Penn National Gaming. This is gaming. This is gambling. Starting to roll over a little bit. I think I'd be a little cautious here. It has a lot to do with, are there going to be football games or baseball games because of coronavirus? Who knows? Point is, the stock has broken down below the 10-day moving average, so I'd kind of put the brakes on it right now. Plug Power, this is really an interesting speculation. I'm very tempted to get involved in this. We do not own this stock, but man, it has really broken out. And this has to do with, hydrogen fuel cells, which is an awfully controversial energy system. But man, really looks like something might be going on here. So anything to do with hydrogen fuel cells, I would keep an eye on. Tupperware, we're seeing Tupperware kind of coming back a little bit. It didn't fall off the list like I projected, but it pulled back. It's kind of forming a cup here, breaking out above the 10-day moving average. We'll just have to see. So all in all, that's it. And if you have any questions, please give me a call. Thank you very much.